All right, let's jump right in. In today's market, it's incredibly easy to get swept up in the daily noise. That's why today, we're going to cut right through it. I'm going to pull back the curtain on my current portfolio and walk you through the thinking behind our positions. And then, we'll get into the big themes, like AI, that are really shaping the landscape, creating both huge opportunities and, frankly, some pretty significant risks.
But first, of course, the obligatory disclaimer: this is all for informational purposes only. It is not and should not be taken as investment advice.
So, when you look at our portfolio, the first thing you'll probably notice is that this is not some sprawling 500 stock index fund. Not at all. It's a focused, concentrated collection of what I believe are truly exceptional businesses. But the real strategy here, the secret sauce, isn't just what we own. It's how we own it. It all boils down to a very strict discipline in how we size every single position.
And here you can see what I mean. Microsoft, that's our highest conviction holding, sitting there at just under 15%. But then look at everything else. Alphabet, Meta, Danaher, Amazon, they're all clustered in this very, very tight band, right around that 7 to 8% mark. Now that's not by accident. That is absolutely by design.
So, why do we do it this way? It's actually pretty simple. It's to protect us from the most dangerous person in the room, ourselves. You see, by keeping most of these positions around the same weight, we're preventing any one single idea, no matter how brilliant we think it is, from blowing a hole in the portfolio. It's a built-in circuit breaker against our own overconfidence. It keeps us honest.
Now let's put this strategy into a real-world context with our newest addition, Constellation Software. The story of why we bought this company is, I think, a perfect illustration of the kinds of opportunities and the kinds of risks that we're navigating in the market right now.
Okay, so what in the world does Constellation Software do? Well, they are the absolute masters of a space called vertical market software, or VMS. I want you to picture software that's designed only to manage a marina, or a specific kind of law firm. These are tiny, niche markets that a giant like Microsoft would never even look at. They're small ponds, and that's the beauty of it. There are no big sharks to worry about. But here's the brilliant part. Constellation's real genius isn't in building software from scratch. It's in creating this incredible cash-generating machine. They find these little profitable companies, they buy them at a good price, and then they take the cash that business produces and use it to go buy the next one, and the next one, and the one after that. It's like a perpetual motion machine for creating value. So if Constellation is such a fantastic business, you have to ask, why did we even get a chance to buy in? Well, it's because the stock got hit, and it got hit hard. And when a high-quality company like this takes a dive, it's not just random market noise. It's a signal that something has fundamentally changed, and it's time to start asking some tough questions. Which brings us to the core of it, really. Why did the market punish this company? The answer isn't simple. The market was reacting to two new, very real uncertainties, and those uncertainties are what created this buying opportunity for us. And let me put a number on it for you. The company's PE multiple, basically what investors are willing to pay for its earnings, got slashed by a third. It went from 30 times earnings all the way down to 20. A drop like that, well, that's the market screaming that it has a serious concern about the future, not just a temporary case of nerves. So what had the market so spooked? Well, it was a 1-2 punch. First, the founder is stepping down. That's always a big question mark. But the real elephant in the room was the threat of AI. In fact, the company held a special conference call, not about a recession, not about a new competitor, but just about AI. And on that call, they basically admitted, we don't know what's going to happen. That level of uncertainty for management, that's what sends a panic through the market.
And you can literally see the market's judgment right here in the numbers. Look at Intuit, a company we own, trading at a premium of 40 times earnings. The market is giving them a clean bill of health on AI. But then you look at Adobe and Constellation. Both are trading way down at 20 times earnings. The market has essentially put them in the AI risk penalty box.
This leaves us at a fork in the road. The bear case is that Constellation's beautiful business model is now broken, made obsolete by AI. The bull case, on the other hand, is that AI is just a new tool and that the company's incredibly deep relationships in its niche markets will protect it. For us, this level of uncertainty makes it a really interesting maybe, an investment that has the potential to become a hell yes if that bull case proves to be true. Now, this whole story with Constellation, it's a perfect example of a much bigger theme we're seeing everywhere right now, the incredible power of market narratives. These big, simple stories are driving stock prices in ways that sometimes feel completely detached from what the business is actually doing.
Take Danaher, for example. The stock shot up 20% recently. Now, did the business suddenly get 20% better overnight? No, of course not. The entire move was driven by a political story, a narrative about healthcare policy. And that's exactly the kind of thing we have to be so careful about, letting a short-term story dictate our long-term decisions.
And this tension between the narrative and the fundamentals is the central battleground right now. On one side, you've got this explosive story about OpenAI disrupting the entire digital advertising world. And on the other, you have the quiet, boring, but unbelievably powerful reality of Meta's 2 billion daily users and its massive cash flow. The whole game for us is figuring out which of those two forces will matter more in the long run.
Right now, the market is treating OpenAI as a kind of universal acid, a disruptor that can dissolve any business model it touches. And that narrative has put tremendous pressure on Meta stock. But here's the thing, while OpenAI is obviously a game changer, the market might just be getting way ahead of itself here, creating an opportunity in that gap between the scary story and the much more complicated reality.
And you know, this whole situation forces us to step back and ask an even bigger question. What is a social network even for anymore? The very definition of these platforms is changing right under our feet, and the answer to that question has profound implications for their long-term value.
Just think about the evolution. They started as a place to connect with people you actually knew, your friends, your family. Then they became massive content engines, places where you go to follow your hobbies and interests. And now, well, now we might be entering a third phase, one that's built around socializing not with people, but with AI.
And this idea, this shift away from human-to-human interaction, it brings up a fundamental question about the business. Is that a valuable evolution? If the core purpose of your network is no longer connecting people with each other, have you strengthened your business or have you fundamentally weakened it? That is the debate the market is wrestling with right now.
Which leaves us with this final thought. As these vast digital worlds keep expanding, are we actually building new and valuable connections? Or are we just building more and more sophisticated mirrors reflecting ourselves back at us? The answer to that question, I believe, will ultimately determine the winners and losers of the next decade, and it's something every single one of us needs to be thinking about.